I divide the market into two, the losers versus the winners. The losers are metals and some of the infra names. Metal stocks are down about 50% this year. FMCG names like HUL and ITC are up about 30% this year. Do you think now the risk reward ratio is in favor of going and revisiting some of the beaten down stocks, or defensives, FMCG brand owners, they will continue to outperform like they did in 1980s and 1990s in US when they were in a 10-year extended bull run?
No, when you construct portfolio, you have to do a mix of all kinds. You cannot buy only one type, and because things may surprise you. So you have to buy beaten down cyclicals, some of them where you understand, like banks. I would put banks or some of the capital goods companies, high quality capital goods companies, if they are available at 50-60% lower price. Of course, the one company which comes always in mind is L&T. I mean, as a capital goods proxy, clearly they are suffering more from the slowdown in order flow, and hence eventually the business prospects will start getting impacted. So there would be some more issues, but I'm saying that there could be one company which if by chance there is a sudden reversal in the entire economic cycle in India, that could be positively benefited. So you have to look at this public sector banks, the banks per se, even private sector banks, except for HDFC, all the banks, ICICI, Axis, everything has kind of fallen quite significantly from their top. So I think banking segment per se, you can have your choice, but there should be good allocation into banking segment, and that would definitely recover, because the businesses have not gone down permanently. There is a fear of a lot of bad assets, and those things will keep coming at the high of the interest rate cycle. You'll always get fear of bad assets, but these businesses are designed to take care of these bad assets, and as the interest rates come down, these banks, again the outlook for these banks will change, and again we'll see new highs. That's what I have seen for last 10-15 years. I bought SBI for 200 rupees and I've seen 3600, and now it is back to 1600. I only hope that it goes back and goes even higher. So these things keep happening. In the longer run, nothing changes. In the short run, everything looks to be new, in the sense that what will happen in 2012. So it looks that we cannot figure out what all will happen. But after a very bad year, typically we have seen that things do turn around.
Do you that bullish on Indian equities, given the way how valuations are looking?
When you buy the stocks, don't expect that today you bought the stock, so from tomorrow onwards you should not see the price lower than that. You should be very clearly ready to see 10 to 15, 20% decline from whatever be the attractive levels you purchase at, because that's the risk, or that's the price you pay for getting into equity. But once you get into quality, you understand the quality, you understand the somewhat your hazy sense of future of the company. You should impart that patience and confidence in the company, and God is great. This invisible hand comes and changes the entire outlook for the markets.
But you are not in no hurry to sell central bank, even though it has fallen 50%.
No. We have to impart that. You have to live through this bad cycle, and when it recovers, then only you can say what is to be done. Because now it's trading at 0.5 to the book.
So which are some of the names where you're pretty confident that you want to remain invested, and let's say you're ready to invest or allocate about 7 to 8% portfolio to some of these names?
If I see that any stock is not doing well, or there's change in their thinking, or misallocation of capital, or if I see very clearly much better opportunity, then clearly I sell that and buy into something else. Like one of the examples I'll give you, I thought that steel industry globally is going to be challenging, and Chorus is not amongst the best placed kind of thing in Tisco. So I sold my Tisco and bought into Can India when this Can India was taken over by Sterlite Group, and whether it was taken over or not, the stock was listed. So I was more excited about the possibility of.
Can was a great call. Thank you for that call. So I'm sure our viewers must have made money on that call.
No, I don't think we have made money, but we have not lost money. The thing is that we have not lost money. We are hoping that in next 1 or 2 years, as the production ramps up, we'll make some money.
So whenever markets will recover, which group do you think will bounce back the fastest? Industrials, financials, or materials? Because all these sectors which I mentioned, they've been beaten down. They've been beaten down by about 30 to 50%.
Yeah, I would bet on financials. And if I can buy best quality financials at current prices, I think the whole issue is, I mean, where to bet in financials? I mean, the best piece of financials you must buy in.
What role do you think currency will play for Indian equity markets next year? And what is your assumption for the rupee dollar equation while constructing or deconstructing your portfolio?
The 20% decline in rupee, that looks to be somewhat more, at least semi-permanent kind of thing, and bulk of it is going to stay, if not all. If I mean, after some time, if there is a kind of a correction to this particular rise, then also it looks that 48, 49, 50 looks to be around 50 rupees to a dollar looks to be a permanent feature, if not higher. So keeping that in mind, all the export oriented companies, they are looking very good. I mean, particularly the tech portion of it, Infosys, Wipro, TCS. I mean, I'm trying to see, if you can understand a little better in terms of their volume growth, what is the potential and those kind of things. But my sense is that this particular segment should do very well if currency stays above 50 rupees.
Raamdeo, you've always been an optimist. You always look at this theory of glass half full. So before we conclude the interview, for the year 2012, are you cautious? Are you bullish? Are you optimistic? Or somewhere secretly you are nervous and you want to admit this time on TV that you're nervous?
No, as we go into 2012, things are not exciting, very clearly. But if you ask me on a 12-month basis, Diwali to Diwali, I would think that we should end up a little more positive.
So the Nifty range which dominated Indian markets, at least in the second half of this calendar year, was 5200 on the upside, 4700 on the downside. What do you mind could be the Nifty range for next 6 months?
6 months is tough to say, but we should be significantly higher by when we meet next year at this point of time.
And what could challenge your conviction?
One is further decline in rupee. That will be really a big challenge. Or some kind of deep political disturbance in India. I mean, the way politics is in India, anything can happen kind of. So if there is a major political disturbance and we are not able to find political consensus to do anything in terms of reforms and all, that would be very disturbing.
So before we wrap, and we get a lot of emails for this one, do you think it's time now for retail investors to pull money out of gold, some money out of fixed deposits, and maybe start a SIP in equities? Do you think that will be more fruitful and more beneficial based on a 3-year period?
I would think so. I would definitely think so. Some amount of equity, if somebody has zero equity allocation, this is definitely the time to start putting some, maybe not full, if you want to go 25%, which should be bare minimum in anybody's portfolio, irrespective of the rest of the portfolio. So definitely this is a time to start.
Mr. Agrawal, wish you a wonderful 2012 ahead on behalf of the entire team, and thank you so very much for joining us.
Thank you.
That's it on the show. I'm Nikunj Dalmia signing off. Thank you for making Crystal Gazing 2012 part of your life.